Hey, TK coming at you. Master Wealth Builders LLC is the company and organization, and I wanted to present to you the concept of diversification in insurance. A lot of people talk about diversity when it comes to a portfolio and when it comes to on market investing, right? But how many people are teaching you that you can truly diversify in insurance? And what really that means is that there's multiple products available for you to cover your entire family, right? Because at this organization, we like to take the total family approach. So, example being term insurance, 20-year term. The difference being here, term insurance is convertible and it comes with living benefits, which means in the event something happens to you while you're still alive, you can access up to 80% of the face value of your policy. And because it's convertible, after, maybe 15 years in a 20-year policy, you can convert it from term to permanent, either into a whole life or into an IUL. So term can be used to basically cover your household expenses, whatever your total household expense is. Let's say you have a house for 100,000 and that's what's left on the mortgage. And then you have total household expenses that come up to another, 50,000, right? So you get term insurance for a total of 150,000, 20 years, and that would be cheaper than getting a whole life policy. But you don't stop there. You split into multiple, which means you get the term and you get an IUL. So you get an IUL, say around 150. So you have a 150 term and a 150 IUL, which is Index Universal Life. And together you have a total of $300,000 in coverage. Then you add on an annuity, which helps you if you're in a position where, let's say, you already have an existing 401k or money in an existing investment account that you want to roll over. So you have the term, which covers your mortgage. You have the IUL, which is your cash accumulation. Both come with living benefits. And you have a larger death benefit for a smaller cost. And then the third component, being an annuity, is only if you had something to roll over. So that acts as your retirement, separate from your life insurance, separate from your term. So all three together within life insurance gives you total diversity. And you could even take it a step further and just specialize in your final expense, which only covers your death, burial, and usually is around 50,000. But what that does is it usually pays out within 24 hours, so you don't have to wait on anything else. And, you can pre-plan everything. So that is a small example of total diversification within insurance. When you couple all of those together into total coverage, you do the same thing for the wife, same thing for the husband, and then for your children, you get individual IULs while they're little, because it doesn't cost a lot of money for a child. Say, like my son, he is only 5 years old. So what I did was I purchased an IUL for my son so that by the time he's my age, he has cash value that he can borrow against. He has living benefits that he can use if he gets sick. And he also has a death benefit. So that's his whole life of accumulation, because I got the policy when my son is only 5 years old. So that's the approach that we try to take here. It's the total family approach. It's diversification within insurance. And it gives you the same stability that you have when you diversify on market. If you had multiple different stocks, multiple different allocations within your portfolio. So think about this as your insurance portfolio, and you're allowing yourself to have stability, because remember, whenever you place money into an insurance policy, it is either tax-free or tax-deferred, depending upon how you structure your policy. When you take a loan out against your policy, it is not considered income Therefore, it's tax-free. So you win when you structure money off market, because insurance is an off market investment. You're not actually participating in the stock market. You're just using the stock market as an indicator to determine how much gets credited to your account every single year. So understand the difference. I hope you guys learned something. If anybody has never talked to you about diversification and insurance, this is the first time. Please take the time to schedule a individual meeting. Use the link in my bio. Hop on a Zoom call. I can do a custom illustration for you. And as a licensed professional, you will benefit by setting this stuff up. I know it's something that we all like to put off. We think we're going to live forever. Nobody thinks they're ever going to get sick or have an accident, but it really does save lives because it gives you peace of mind. If something happens and you don't have this coverage, you don't have this diversity, what happens is you have to do a GoFundMe. You really want to set yourself up. You really want to set your family up. And I know that we put it off and we don't like to talk about insurance, but it's a smart thing to do. And it's more beneficial than playing in stocks. Because remember, in insurance, you have a principal guarantee. There's always a 0% floor, which means that you never lose money when you put money in. Your principal is guaranteed to never be lost. Please take the time to cover your family. Let's make insurance an important thing in your life. If it's something you thought about, if it's something you've been putting off, and don't think you're covered just because you have coverage at work. Your policy at work does not have living benefits. You can't borrow against it or take a loan out against your policy at work, and it's only valid if you're still at that job when you die. So let's self-direct our insurance needs and get total diversity in your insurance portfolio.